Good afternoon, everyone, and thank you for joining this call. I'm pleased to announce Woodside has entered into a binding agreement to acquire OCI's clean ammonia project in Beaumont, Texas. Before I get into the details, I would like to begin by acknowledging the First Nations people of the various lands on which we live, work, and play, and pay my respects to their elders past, present, and emerging. I'm joining this call from Karratha, and I would like to recognize the Narlima people as custodians of these lands. Today, I'm joined by our Chief Financial Officer, Graham Tiver, and my Special Advisor and former Executive Vice President, New Energy, Sean Gregory. In this call, we will provide an overview of the acquisition before opening up to Q&A. Please take time to read the disclaimers, assumptions, and other important information on slides 2 and 3. I'd like to remind you that all dollar figures in today's presentation are in US dollars unless otherwise indicated. Today, Woodside has entered into a binding agreement to acquire OCI's clean ammonia project in Beaumont, Texas. This acquisition positions Woodside to be an early mover in the lower carbon ammonia industry and meet growing customer demand globally. It supports our strategy to thrive through the energy transition with a low-cost, lower-carbon, profitable, resilient, and diversified portfolio. This is a mature project with expansion potential. The project is already well advanced with construction 70% complete. Ammonia production from Phase 1 is targeted for 2025, with the addition of carbon sequestration targeted from 2026 to enable the production of lower carbon ammonia. This acquisition reflects our disciplined approach to investment, whether in new energy or traditional oil and gas. It exceeds our capital allocation framework targets of 10% internal rate of return and payback period of less than 10 years. Phase 1 is free cash flow accretive from 2026 and earnings per share accretive from 2027. This investment marks a material step forward in delivering our Scope 3 targets, which are twofold. First, we have set an investment target to invest $5 billion in new energy products and lower carbon services by 2030. Secondly, we have a complementary abatement target to take final investment decisions on new energy products and lower carbon services by 2030 with total abatement capacity of 5 million tons per annum of CO2 equivalent. Going to slide 5, the $2.35 billion purchase price includes the full cost of constructing Phase 1, which OCI will manage through to completion. OCI is an experienced ammonia plant developer and operator and has provided cost, schedule, and facility performance guarantees, which reduces the execution risk for Woodside. The scope of the acquisition includes the project and, importantly, an experienced team to run and maintain the facility, bringing operational and commercial experience from OCI's history in the ammonia business to complement Woodside's capabilities. Let me explore the key value drivers for this transaction in more detail. Slide 6 explains why this project is advantaged. Its location on the U.S. Gulf Coast provides access to abundant feedstock of nitrogen and hydrogen. It also has access to U.S. regulatory incentives, including the Section 45Q tax credit for carbon sequestration, that supports a lower equivalent unit price of hydrogen supply. Importantly, it is well placed to serve the U.S. domestic market as well as European and Asia-Pacific markets, which are expected to lead adoption of lower carbon ammonia due to increasing carbon cost requirements. The project also benefits from incorporating OCI's history in the ammonia industry into the facility design. Since 1997, OCI has built 8 world-scale greenfield ammonia plants across the U.S., the Middle East, and North Africa. The Beaumont Clean Ammonia project is the third of this particular design it has built. Slide 7 describes the acquisition scope, which covers the ammonia production portion of the process. The schematic illustrates why this is a capital-light project, with the feedstock being sourced under contract from third parties rather than having to build dedicated hydrogen and nitrogen facilities as part of this plant. Linde will be providing the feedstock of nitrogen and carbon-abated hydrogen. The hydrogen will be derived from natural gas paired with CCS. The CCS will be provided to Linde by ExxonMobil under a contracted arrangement and is expected to come online in 2026. This is a strong partnership with Tier 1 suppliers with competitive terms that are already locked in. The ammonia plant will have capacity for 1.1 million tons per annum for the first phase and has been designed with scalability to accommodate a second phase, which would add an additional 1.1 MTPA. Woodside is targeting FID readiness for the second phase from 2026. As part of the transaction, Phase 1 will be completed by OCI, started up and performance tested before handover, and includes cost, schedule, and performance guarantees. As you can see from the picture on slide 8, significant progress has been made on the site. The main process equipment is already installed, including the ammonia converter and the synthesis loop compressor, both of which are visible. The Linde facility that is contracted to supply feedstock and the ExxonMobil CCS facilities are also under construction. The ammonia project is expected to start up in 2025 before the Linde and ExxonMobil facilities are available. During this time, the project will produce unabated ammonia. Early feedstock supply will come from multiple suppliers, including Linde, from available capacity on the Gulf Coast. This is an example of the advantages of this location with multiple feedstock options. The Linde production facility is targeting startup in early 2026. The ammonia becomes lower carbon ammonia when the CCS becomes operational, which is targeted also for 2026. Going to slide 10, the value proposition for this transaction goes well beyond a simple acquisition of infrastructure. We are excited to welcome a number of experienced OCI professionals to Woodside and place high value on the world-class ammonia business capability they will bring. We see a strong cultural fit between our two companies, including commonalities in approaches to safety, process safety, operations, and project execution. We also expect the project will benefit from Woodside's existing customer relationships, marketing experience, and operational expertise. This combination positions Woodside strongly in the emerging lower carbon ammonia industry. As you can see, this is an advantaged opportunity with strong players through the value chain. Let's now step back and talk about the increasing demand for lower carbon ammonia. Ammonia today is a vital commodity used in fertilizers and chemical processes. Current demand is almost 200 million tons of product produced per annum. This means there are established value chains, reducing the market risk. The ammonia market is forecast to double by 2050, in part due to expected growth from traditional uses as the world's population increases. But we also expect demand growth for lower carbon ammonia from new uses, including power generation, marine bunkering, and as a hydrogen carrier. Importantly, lower carbon ammonia is expected to make up 2/3 of the market by 2050 as industries move to decarbonize and stricter regulations are implemented. This project provides Woodside an early mover advantage, well positioned to supply this growing demand and establish preferred provider status with customers. Evolving policies are establishing a framework to incentivize lower carbon ammonia. In Europe, the enacted Carbon Border Adjustment Mechanism, or CBAM, will apply a carbon tax on imported products, including ammonia. The requirement to purchase CBAM credits will begin phasing in 2026, until fully phased in by 2034, as illustrated in the bottom chart. This will create a pricing advantage for low-carbon ammonia relative to conventional unabated ammonia. The OCI Clean Ammonia project, with its lower carbon intensity, will have the potential to attract premium pricing when compared to conventional ammonia producers. Similar economic policies are evolving in markets like South Korea and Japan, providing direct or indirect subsidies for the importation and use of lower carbon ammonia for power generation or as a carrier mechanism for hydrogen. Going to slide 13, one of the most attractive parts of this opportunity is the returns. We have high confidence in the costs through the cost performance and schedule guarantees secured as part of the transaction. The supplier agreements for feedstock are also locked in. With this, Phase 1 generates over a 10% internal rate of return. Underpinning this, we have made assumptions about a price uplift for lower carbon ammonia. This starts out as zero and is phased in over 10 years using the carbon border adjustment mechanism as a framework. We expect Phase 2 to see even more competitive returns, benefiting from the design decisions for Phase 1, allowing for efficiencies when Phase 2 is executed. And again, the value of this opportunity goes beyond the returns to include the capability and positioning in a market with significant growth forecasts. Now that we've shared the value we see in this opportunity, let's look at how it fits into our capital management framework. As we reiterated in announcing the Driftwood transaction, we are disciplined in creating shareholder value and have a track record of positioning the balance sheet to accommodate growth. We recognize that our strong dividend payout is an attractive reason to invest in Woodside. Our capital management framework remains unchanged. Phase 1 of the project is under construction and is forecast to be free cash flow accretive from 2026 and earnings per share accretive from 2027. Our balance sheet continues to be well placed. We have a strong underlying business generating significant cash flows. We continue to have capacity to pay strong dividends. Let's move now to slide 15, where we discuss climate considerations. In 2021, Woodside set a Scope 3 investment target, aiming to invest $5 billion in new energy products and lower carbon services by 2030. In February, we announced a new complementary abatement target to take final investment decisions on new energy opportunities by 2030, with total abatement capacity of 5 million tons per annum of CO2 equivalent. As well as generating solid returns, the OCI Clean Ammonia project acquisition makes a material step towards delivering on these Scope 3 targets. Phase 1 has a capacity to contribute up to 1.6 million tons per annum of carbon dioxide equivalent abatement when the CCS component is operational. The carbon abatement via CCS will result in a lower emissions profile for the hydrogen that's used as a feedstock and will in turn enable the project to produce lower carbon ammonia compared to traditional projects. Moving to slide 16, which reinforces the attractiveness of this investment and highlights the climate analysis that was incorporated as part of the investment assessment. We presented a similar slide for Trion when we made a final investment decision on that opportunity last year. Going to slide 17, I'm very excited about today's announcement. Since the merger with BHP's petroleum business, we have made significant investments across all three pillars of the business: oil, LNG, and new energy. Last year, we took FID on Trion. We recently announced the acquisition of Tellurian and the Driftwood project, which remains subject to satisfaction of relevant conditions precedent. And today, we have announced a valuable investment in new energy. We are continuing to ensure that Woodside will thrive through the energy transition. To recap, this acquisition fits our strategy. It positions Woodside strongly in a growing market, is expected to exceed our capital allocation framework targets, and it can make a significant contribution towards achieving our Scope 3 investment and abatement targets. I will now open up to Q&A. I ask you to limit your questions to 2 to provide everyone with an opportunity to ask a question. Thank you.
Thank you. If you wish to ask